Good morning. I'm here to admit the mistake I made when I covered LPHI for the first time. Marius brought some news that contradict my estimates. So let's make a new analysis for this. This is the chart since the IPO. You can see the stock has been bullish lately. Let's check the short term. Well, when I covered it was at around $24. It is more than 30 now, so 20% above. I was clearly wrong on this one. Moving on to my valuation model. Here we have the initial share price, $30.11, which is Friday's close. Share count is 9.62 million shares. Dilution factor 0. There hasn't been any over the past 5 years or so, so I get the final share count of 9.6 million again. Initial revenue. This is the revenue the company had in fiscal 2007, which ended in February 28th of 2007, and it was $29.8 million. And I expect revenues to grow 60% a year. Before I had just 24%, but the market leader in this segment was prosecuted, and it seems to be getting out of business, and this company is benefiting a lot from that, and revenues are growing very rapidly. So I expect 60% revenue growth going forward, and this gives me a final revenue of 122 million. Initial net profit margin. This is the net profit margin the company had in fiscal 2007. It was 12.2%, but in the fiscal 2008 first quarter, let me check if that's in the first quarter of fiscal 2008, it had net profit margin of 26.7%. So net profit margin more than doubled here. So I expect this net profit margin to continue about 26.7%. And this gives me a final net income estimate of 32.6 million for fiscal 2010 and earnings per share of $3.39. If we apply a 20 times earnings multiple to this, well, its industry is just 15.6, but given this company's revenue growth and very fat net profit margin, I believe 20 is more appropriate. Gives me a final estimated share price of $67.78, share price compound annual growth rate of 31.1%, so the stock should only be sold at $43.42. This is the price where it will start returning less than 16%, which is my minimum threshold. So I consider it attractive. Previously I had given it a 3 out of 10 rating, but now I'm gonna give it a 7 out of 10, and so I was wrong on this one. Good luck if you own it. I'm not gonna buy it now, not because it is up so much, but because I don't understand the business very well. This is about insurance and buying and selling insurance, and I really don't like the insurance business, and I don't understand the sector very well. So good luck if you own it, and well, I've admitted the mistake. Bye.